And we talk so much, Seema, about sales. Are they going to sell more to us? Are we going to sell less to them, et cetera? But you believe that technology earnings may really be the macro market story here. How come?
Yeah, that's right. I mean, it's a concern that we've had for a while, actually preceding the latest tweets from President Trump. Because the demands that US have for China over technology transfer, IP theft, etc., have been very, very difficult for China to meet. They're pretty much existential to their 2025 plans. We always knew that there would be a slight issue and there could be continued export controls from the Trump administration on the tech firms. Now, because of the global supply chains, it does mean that US firms supply a lot of the components that go into Chinese technology. So you'd not only have an issue growing with the Chinese tech firms, given the export controls that have been put on, for example, on Huawei, but we also will have a continued impact on US technology firms as well. Now, if you consider that over the last 10 years since the financial crisis, technology has really been the key driver of equity markets. If you have an issue where the technology sector globally is really struggling because of the trade war, it's going to be an issue for the overall equity market as well.
How big of a deal do you think this would be? Because earnings growth in technology has been, I believe, according to your own research, more than double that of the overall market excluding technology. So if that comes down, how much of an EPS hit could this be?
I mean, this could be quite significant. What we'll be watching for over the next few quarters is going to be the guidance. So company guidance, are we going to be hearing that companies are struggling, for example, to sell in China, potentially because of weakening demand or simply because of the difficulty in actually getting their products to China? That would be a real issue going forward, and I suspect that we would see the technology starting to fade. And without any obvious other leaders for the equity market, then it could be a sign of continued struggles going ahead.
What if we get some kind of a deal? Is everything sort of the all clear being sounded for technology?
Well, this is an interesting point. What we are seeing is that, there is still some expectation in the market that there will be a deal in place within a few months. If that were to happen, I would expect the equity market to really rally quite strongly. However, in the background, I think the technology problems are going to continue because unless China is able to completely change all of their structural plans with regards to technology, this is going to be a continued problem going on in the background with the US and China.
Yeah, because even if we get a deal that is signed, this has been a wake-up call to US and Chinese technology firms both, has it not? Business is not just going to go back to the way, oh, everything's fine now, let's keep doing it. No, no, no. Supply chains are going to move. We've got the U.S. banning Huawei and now another company this morning from China. It's not going to go back to the way it was.
No, it won't. And, I mean, the headline, tariff war to trade war to tech war, is, I think, key. We could see a step back in the tariffs. That's certainly possible. But the tech war continues. And then on top of that, what we have learned in the last few weeks is there is absolutely no guarantee that this trade war, even if there is some kind of agreement, it will be maintained. I think the markets will maintain some element of risk aversion and uncertainty because they simply don't know when the Trump administration may at some point turn around and say, China is not meeting our demands and we're putting those tariffs back on, or we're going to start new export controls on firms.
So what do we do, given that backdrop, Seema, given everything you just told us, what should our viewers around the world watching CNBC right now do with their money? Sell out of technology?
I think there has to be some caution with regards to technology. Now, I think it's very early days to sell out of technology. And one of the reasons for this is what we've seen in the last week or so is it may be that the Trump administration has got a level of a pain threshold almost with equity markets. So you see the equity markets fall around 4 to 5%, and then we have a good announcement from the Trump administration, for example, allowing businesses a 3-month window to continue trading with Huawei, and then the markets rise again. So it may be that if you do see technology starting to fade and really impacts the overall equity market, you could see that the Trump administration turns around and backs off a little bit, in which case you could see a slight lift up again in tech.